Hello everyone, and in today's video we are going to discuss how world's largest fiat currencies are doomed to fail. Let's jump right in. So first let's answer the question, how do you define a failure of fiat currency? So let's first have a look on fiat currencies of the world which were assigned as a reserve currency of the world. That means other countries were exchanging their goods and services in the currency of this country, and this fiat currency was recognized as a world's medium of exchange. As you can see on this chart, an average reserve currency of the world existed for around 100 years, and then it faded away towards some other currency. The question is, why didn't the reserve currency persist? Why didn't Portugal, Spain, Netherlands, France, UK could not keep their reserve currency status? And why do I think that US doomed to repeat the same mistake and lose its reserve currency status? The simple answer to this question, because governments got overspent. They started to spend money beyond their means. Their currency in the short run would not depreciate because other countries would need that as a medium of exchange. But in the long run, huge amount of debt, economic stagnation, and eventual collapse, that's what brought these current reserve currencies to the end, and they were replaced sequentially by something else. In my opinion, this something else does not have to be the currency of one country. You might think that maybe Chinese yuan will be the next reserve currency. I don't think that. I think in the future there will be more place for the multiple currencies competing in the open market, possibly through the ledger technology. But this is a topic for a whole another video. So let's analyze US first. So as you can see the chart on the screen, US dollar for the past 40 years was losing a share of global reserves. This is one of the signs when the currency becomes less important and less appreciated as a medium of exchange in the world. In the next chart, you can see US government debt held by foreign holders. As you can see, during the 2000 stock bubble burst, during 2007 global financial crisis, sequentially foreigners bought more and more debt of the US on the global market. However, in 2000, COVID crisis hit the world economy, something different happened. Foreigners did not jump on US government debt as they were doing in the past 30 years. This time, foreign investment in US government debt significantly lower, and it doesn't look that it expands at all. It means foreign confidence in US economy not as strong as it was 30 years ago. Remember when I mentioned the world reserves currencies of the world getting overspent, overextended, overleveraged, and eventually bankrupt, and that how their currency loses value? So look at the interest rates. Interest rates should be reflective of how healthy the economy is, because the lower interest rates, the more incentives government create to speculate, to malinvest, to basically pollute economy with this unproductive investments. In the past 20 years, US interest rates were falling significantly lower and lower every time crisis would hit. And after this crisis, they were never able to return to the level before the crisis. So it looks more like a self-perpetuating spiral from which US cannot get out. And more they continue to stimulate the economy with this cheap money, the more bad incentives and speculation prevail on the market, which in the long run destroys the economic value. What is economic value? Well, it's goods and services. If you only speculate in the financial assets, you don't actually create any goods and services by which wealth of a country or nation is measured. So this is just one of the main indicators to see how history, again, Mark Twain said, doesn't repeat itself, but it rhymes. During the past 300 years, there were multiple cases of countries overspending, overextending, and eventually bankrupting their currency. The next important chart is CPI. Why do I bring CPI into this equation? Because reserve currency of the world can print as much money as they want. They can divert every crisis as long as they keep printing and spending money. The only break on all this continuous printing and spending might be loss of the value of their currency and inflation. So CPI is official government, US government indicator of inflation. Even though I think that it understates the inflation, we use these figures, and you will see even those figures are fairly high. So the June CPI year over year in 2021 is 5.4%. So if it continues in the same trend, it means by the end of the year, US would experience 5% of inflation, and basically US government can inflate away around 1.5 trillion of US dollar government debt. Of course, the problem on the other hand that government runs deficits of around 3.5 million US dollars a year. It means they are inflating only less than half of what US government actually spends. But just considering the scenario that wages in US would start to rise, it means people would have more money at the same time the amount of their debt would be diminishing through this inflation, which creates all other range of bad incentives in the economy. And it's again a topic for maybe another video. So as we're talking about CPI, let's just touch on the point how plausible this government figure is versus what happens on the real market. So according to the Realtor.com, which is a company who actually sells and rents apartments, according to their data, house rents went up from the year before by 8.1%. As you have probably noticed from the CPI slide I posted on the screen, you could see that shelter was marked with a red ink, and the shelter number, according to government figures, is 2.6% of the increase versus the real market number of 8.1. Where does this difference come from? The fact is that when US government assesses the shelter price increase, they ask the homeowners how much would the homeowners charge to the renters at any given time. This is a huge difference of this perception of the people versus what actually happens on the market. That's why if you try deeply understand CPI, you'll find a lot of flaws and inconsistencies with what actually happens in the real economy. So with all stated, I'm not saying that we are doomed to go to the spiral of inflation or hyperinflation. The economy itself is still highly deflationary. If you consider the productivity, demographics which is falling, older population who is going out of the working force, huge amount of debt, all of this is highly deflationary. The fact that US government was able to generate inflation through the government spending is exceptional. As Eric Townsend said in one of his interviews with George Gammon, deflation is a fire, and quantitative easing used by US government like a squirt guns. So it doesn't really make a difference because deflation is so strong you cannot do anything with that. But if you take last year where US government tried to flood US economy with printed money, and I'm saying it's printed because US government does not support all the spending by the tax revenues, it means Federal Reserve must monetize it. That's more of a water flow which might actually damage this huge deflationary fire. And on psychology side, there are no incentive whatsoever for US government right now to try to be frugal and try to be responsible where there is such a huge economic inequalities, where is such a huge incentive to go way over spending, which US government was pursuing for the past 50 or 100 years. That's why when the next bust comes, whether it be in stock market or real estate, it will be another nail in the coffin of the US economy. And the last nail in the coffin of US economy will be a currency crisis. If US dollar collapses against other currencies, there are no further way to spend and support the economy. And that's what I think will eventually happen. How much time will it take? Nobody knows. Many smart people knew that when Soviet Union was founded, that it would eventually collapse. But it took them 70 years to prove them right. And this uncertainty is what actually professional investors are working with, because they are trying to preserve their wealth, let alone gain it in these uncertain times of crazy markets and overextended economies. I will see you in part 2 of this video where I will touch on the economies of the other fiat currencies around the world and how they play in this fiat currency crisis equation. Thanks everyone, and I will see you in the next video. Bye bye.